to the RationalInvestor.com's Daily Brief. The answer to your question is learn the goddamn process, trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello, everyone. Happy Monday morning. TGIM. Here we are, 9 o'clock on the West Coast, 10th of July, 2023. So working our way through the first 2 weeks of the new quarter. Kind of a flat day, actually. I've been doing sort of TRI company business today, not really paying too much attention to the market. It does feel as though it's a bit of a quiet Monday morning. So not really too interested in taking any new positions. Like I said, actually doing a bunch of business elsewhere. Not quite sure if the dashboard is actually operating correctly. I sure would have liked to have seen that the tech department had cleaned this data up here, because I don't even know if this is usable right now. But anyway, never been closer. You guys know how all those lines go. Do you see here the last data print we have here is for July 7th, and I think that must have been Friday. Yeah, 7th. So we'll see how that goes. And actually today is Monday. So usually Monday I like to sort of review what the dashboard is telling us on the Afterparty show. So maybe tune in for that in about a half an hour or so. And we'll go through any signals. I haven't even looked at key reversals or anything, so we'll see if there's anything new to be done. I don't think there is, but yeah, I never know. So you know, just general message for the public, and of course we don't want to get too specific here, but this is your sort of your Monday morning tease. Sure looks to me like everything is kind of in a we got a little bit overdone to the upside, and now we're actually breaking back to the downside. Transports, bond market, S&P 500. Europe's looking a little dangerous up top here. Canada's kind of flatlining. Actually, I think I talked to you guys about this before. The oil market has actually put in a pretty bullish reading here. It's so ironic, of course, because Canada is like sitting on, like, I think it's the second largest oil deposit in the world. But, you know, thanks to substitute drama teachers, Fuzzy, this one's for you. Stupid idiot doesn't understand the construction of Canadian economy. In fact, I even saw somebody the other day, even on YouTube in the shorts and stuff, saying, does this guy understand that Canada? I mean, the irony of it all is if it wasn't for the oil industry, the Canadian currency would be worthless, because the internal fundamentals of this country are just laughable. Anyway, so not a big surprise, actually. Canada is pointing up here with the firmer oil market, and we haven't updated this Australian data in a while, so we should probably just take that right off. But anyway, so there's your little tease about the breadth. And of course, yeah, maybe we'll talk crypto breadth in the after party. News today, I didn't really see anything that really irked me or shook my world. We used to have the API RSS news feed on here, and frankly speaking, I think the Associated Press is really the only source that we should be using right now for news. And, you know, when I went through sort of the news rags that we do have on here, you know, socialists over here, and then the utter, it's kind of funny, we have like the socialists here and then the utter insane capitalists over here. It's the same old, you know, BBC talking about Ukraine. Seems the BBC spends most of its time talking about Ukraine. You know, sex offenders down in the States getting stabbed in prisons. I suppose probably that's a black hole you could disappear down, I suppose, but won't touch that. I get the impression that Miss Yellen What are we supposed to be doing when Yellen is yelling? Uh, anyway, I get the impression that this trip sort of was just a big nothing burger. And frankly speaking, she's like what, number two or number three or number four on the most important list, and the Americans certainly haven't endured them with the Chinese of late. The irony of Mr. Trump is that I actually think that what he likes to do is tell the public one thing and then basically do the exact opposite behind closed doors. So ironically enough, he probably was way more friendly to China than Biden and the Democrats. But anyway, that's here nor there. I think the Americans and the Chinese are on a bit of a collision course anyway. And if anything, hopefully the unwinding of this stupidity over the past 20, 30 years with us just whoring ourselves out to the Chinese will start to bring a lot of these imbalances. Like the Canadian real estate market, the only reason why it looks the way that it does is because of all this Chinese outside influence. So if that bubble has popped over there and, maybe even they deteriorate into some sort of civil war, maybe that'll eventually bring the Canadian economics back into what it should normally be. But anyway, only time will tell. So, didn't really see anything news-wise that really jumped out at me. Econs, I got to sneeze. Hold on. There we go. Hopefully I don't look too messed up there. Can't remember the camera's on, eh? Do I look okay? How am I looking? Anyway, I think I've told you this before. It's the way that I used to sort of set up when I was, a broker. And how do we set up our day? Really, just take a gander at whatever Japan's done, and that'll give you a pretty good idea, especially Monday morning. Coming right out of the gate, beginning the week, the Asians obviously start things off. And Japan, I get the feeling that this sort of fakisi of whatever the hell this Chinese nonsense society thing was over the past 10, 20 years. I wouldn't be surprised if Japan slowly reemerges as sort of this world's second largest economy. I don't know. You listen to guys like Peter Zahn, and China's just basically a ticking time bomb. And I never believed in it. And I've told all of you repeatedly, don't take the chance of investing your hard-earned money in a place like China. If you're going to take bets in Asia, invest in things like Japan, Australia, South Korea. Hell, you can even go to, well, I don't know. I wouldn't. All of those kind of nations that at least have some sort of rule of law. China has no rule of law. And I've actually seen over the past 5-10 years running this education program, some blatant examples of CCP just basically coming in and stealing companies' assets right from them. There's not a damn thing you can do about it. So anyway, point of the matter here is you can see Japan was down a good couple hundred points, about 0.5% on the day. That's probably how North America is going to finish out. You can see NASDAQ's taking a bit of a punch in the nose here, basically down that percentage move. Interestingly enough to see that actually the Dow stocks are trying to buck the overall trend up 77 ticks here. When I go through my morning routine, and hopefully, you guys are starting to see the sort of consistent behavioral pattern here. Did have a site member, actually, Rush, who yesterday had reminded me again that we were considering doing a fall boot camp. So in essence, if I was going to do a sort of live in-person training program for the day traders, it would just be simply replicating this sort of behavioral pattern on a daily basis. So first things first, computers working well. Diet and exercise. Diet's okay. Actually, I'm eating fairly well, and I think got a pretty good hue. Not too much gray. Still holding on to a bit of hair on the top of my head. Exercise. Of course, I've got my post COVID vaccine sicknesses that I'm dealing with. Thank you very much, stupid drug companies and substitute drama teachers who are total hypocrites now. You know, when we were in the middle of the sickness, the guy was like literally going to throw you in prison if you didn't take the vaccine, kind of idea. And now he's saying, oh, well, I never said you had to do it. I mean, give me a break. What a fucking hypocrite. So I have issues with my health right now. Thank you very much, Pfizer. And then finally, how's my sleep? Obviously, health is affected sleep, but it being Monday, I wasn't too concerned. I gave myself a little bit of leeway here. I don't really like to force day trading right out of the gate on Monday. 9 times out of 10, those setups don't work anyway. So, and as I told you earlier, you know, we had sort of TRI meetings later on yesterday because our people are all over the world. So one of the big things I had to do here today, and as soon as I'm done this call, is go do some more TRI business. So I'm not really quote unquote trading today. As I said there a moment ago, the Econ headlines relatively muted. U.S. inflation expectations fall for the 3rd month. And I would expect that, no pun intended, I would expect that this is going to happen. The question, I guess, I suppose, is there going to be another manufactured sickness here in the next year or two? I have a feeling there is. You know, the powers that be still are they're about halfway through this great reset. And another sort of one of these pandemics that mysteriously pops up out of nowhere and conveniently screws up supply chains and stuff like that to justify the hyperinflation, you know, basically add a zero onto the end of all your prices, you plebes, and then we can, you know, continue the debt joke banking system for another generation. That's what I think's going on here. So, you know, we'll see how it comes. And I did a long rant in the Broiler Chicken show yesterday about the inflation data and how probably into 2025, maybe if we're lucky, early 2026, we should actually see the inflation numbers come all the way right back down to zero. And then all of a sudden, boom, they explode again and they go even more dramatic than what we just saw a year or so ago. So to see that these inflation numbers and inflation expectations are going to slowly tick their way down here over the next probably 12, 24 months, I think makes sense. Also, too, you know, we've talked lots about interest rates. Still really haven't got my long-term interest rate studies back up and running. Thank you very much. Stupid 1% killing the Eurodollar market quotes. So, but the bottom line, I think I went through that yesterday as well, is, you know, based on our 4-year sine waves, I think we are coming to some sort of peak in short-term interest rates. You know, is there one more rate hike? Is there 2 more rate hikes? It's somewhere in this area. Also, too, you know, things that sort of fueled the inflation push. You know, when the supply chains were disrupted, of course, all the flow of new cars into the market halted, and the car dealers, they still need to sell something, so they switched to the used cars markets, and there weren't that many used cars, so they got into like bidding wars to try and gobble up all that supply, and that, of course, was one of the big sort of excuses for our inflation push. And you know, with the new cars now, basically the production streams back online and stuff, that sort of bubble in the used car market seems to be deflating, and it wouldn't surprise me. What you're probably going to find is all of this sort of things that went hyperinflationary there that last cycle are going to slowly unwind themselves. And actually interesting, they pointed out that a Chinese inflation actually was basically flat in June. And from what I understand, there, you know, the whole idea is that you start your economy off as a command economy. This is the old guns and butter debate. And totalitarian dictatorships, they love producing guns. And it's a nice, easy business, especially if you're in an international arms sales kind of idea to generate cash. But that can only go on so long. That's what they call a command economy, sort of central planning. The only way that you can sort of really get these economies to sort of self-fuel themselves is if you can switch the economy from a command economy to what they call a consumer-based economy, or butter, in the guns and butter analogy. And that's been the big debate over the past 5 years or so. And there were people like that Chak Pak guy and, that little group of sort of newly minted billionaires that sort of thought that China was now the new economy and this is the way it was going to be. And it turns out that actually it was all just a load of horse shit. And there is no domestic economy in China. It's all still very command economy. And what's really sad about what happens in China, because it is a command economy, and if you don't do what you're told, you get sent to a prison camp kind of thing, people will actually do stupid things like paint the ground green so that the CCP official of the environment comes and inspects your territory and is taken up on like a gondola or like overflies it in a helicopter and see, look, everything's green, everything's natural, everything's growing, and it's a total fraud. So anyway, that's China for you. So I wouldn't be surprised if a lot of this sort of nonsense that we've seen over the past 10, 15 years starts unwinding about China. And actually, I thought it was really interesting. I saw an article recently about how the Three Gorges Dam is actually starting to crack. And they did a lot of shortcuts making this Three Gorges Dam, and it turns out some of the shortcuts are costing them. So that would be hilarious if that Three Gorges Dam all of a sudden just completely unwinds. Anyway, we'll see what happens. But interestingly enough, probably this is the headline, right? U.S. stocks edge higher, and it's kind of mixed bag. I think I told you right off the gate, right out of the gate, if Japan is down and you wake up and you see Japan down, odds are the American market's probably going to be down too. But everybody's sort of waiting for this big inflation number that's probably going to drive Fed sort of attitude. Where am I trying to get to over here? And that inflation, those inflation numbers are coming out Wednesday. So I get the impression we're all sort of just sitting here sort of with bated breath waiting for the big decision. It is interesting too to see that on the release of that US inflation data, we actually have the Bank of Canada, which I think, to all intents and purposes, I think the Bank of Canada is actually like the Rothschilds, the 1% World Economic Forum. I think it's actually their mouthpiece. The guy who used to be the governor of the Bank of Canada for a very long time, Carney, is actually now sort of like the World Economic Forum, big shot, bureaucrat, banker guy. So I have a feeling that, basically they use the Bank of Canada, the Rothschilds, and all the sort of 1% as kind of like their telegraphing message. So anyway, we'll see what happens out of them on Wednesday as well. Other than that, today, we have a bit of Australian data. I don't know whether that's going to really move the market too much. That's probably half the reason why the Asian market was as weak as it was. But actually, no, that should come out later on this evening. I beg your pardon. So that hasn't even come out yet. Okay, so news, pretty quiet day. Econs, pretty quiet day. So as a result, I mean, it shouldn't surprise anybody. Stock market, pretty quiet day. We've got, I like to follow the ES. It's sort of the broader measure of the market. Dow 30 would be sort of the biggest names in our society. The NASDAQ, QQQs, heavily sort of skewed towards tech, especially like NASDAQ 100. S&P 500, this is the biggest 500 companies in the US market. So it kind of works as a good balance. Suppose we could also talk Russell 2000 as well. That would be an even further benchmark. It's interesting how sites like FinViz now are actually adding the Russell 2000 to their analysis. And an interesting commentary here, because it looks to me like what's happening here is tech. You can see all these big tech names are all kind of taking a bit of a pause here. But the Dow up 3.4%, and there's the Russell 2000, the small cap market up a full 1%. And I have heard a lot of people talking recently about, well, what the Russell 2000 really includes a lot of is, there's something like 4,000 regional banks in the United States. And a lot of those bank stocks are actually in the Russell 2000 index. So you can almost think of the Russell 2000 as a sort of a quasi banking index in a weird sort of way. I think this is like old economy, brick and mortar versus new economy, your tech stocks. And then the S&P 500 is sort of a mix of all of them put together. Why am I going on about all this? We don't need to get into too much detail here in the free show, and probably I'm running out of time here anyway. But we talked to you lots about this. This is pretty important if you do follow the market. What I find fascinating is I don't see too many people, social market commentators and stuff, actually talking too much about this on social media and stuff. But anyway, a lot of people follow sector rotation modeling in the broader market. Sam Stovall, actually his dad, I think, was the guy who originally did it. But anyway, he sort of made it very, very popular 20, 30 years ago. And it's just simply a commentary on where we are on the economic cycle and what we should expect as outperformance and underperformance. And I think I talked to you guys recently about how things like energy market, when we look at the crude oil, this oil market does have a pretty darn big W working down, up, down, breakout. You heard me barking about the Canadian dollar and the Canadian economy. Interesting enough, I would actually expect the Canadian dollar to go up if oil prices go up in earnest. You could also make the argument that this is also a pretty wide base, but there are sort of double bottoms, triple bottoms, quadruple bottoms. I don't know what you want to call it. But there's like Foggenbaum targets to the upside, and really all this will be is a test of these highs. And if this big double bottom fires, oh boy, that's going to paint even bigger upside objectives. But you can see, the oil market is trying to start working its way higher. We did make a new high here today. So this is going to be sort of commentary that maybe we're right here on the economic cycle. Because keep in mind, the first 2 weeks of the quarter, this is usually where the fund managers, they get given huge chunks of money on a quarterly basis. They have to be invested, so they have to put that money into the market. Where are they going to put it to work? They're going to put it to work where they think we are in the economic cycle to maximize gains, right? Just that's what they're there to do. Got to pick the winning stocks, all that kind of talk. So if anything, being the first 2 weeks of the quarter, last week was kind of a wonky week, given all the holidays and all that. So this is probably a really good example of why we probably want to use the first full 2 weeks. And I think you can clearly see they are not putting money to work in Microsoft, Apple, Amazon, Tesla, Google, Meta, right? They're taking, if anything, you could say they're even taking money out of those sectors. And does that make sense? We have been, I think I've shown you recently on the TRI engine, things like the industrials, the basic materials, the energy ETFs. They're where the money is flowing in, not out, in. And you can see even today, money is flowing out of technology, discretionary communication services like that. So I'm getting the impression that we're not this part of this economic cycle. The fund managers think we're more like this part of the economic cycle over here, which is interesting because, of course, we have been conjecturing, is there some sort of market top coming in here? And are we getting ready for some sort of dump or something into the fall? Like September, October, the markets usually dump anyway. So if we did have a sizable correction through that window, it wouldn't be shocking. And if we look at the stock market, this is actually the futures contract. We should probably just look at like something like the spot market. Would it make sense historically that we are coming up into a resistance zone? Unfortunately, that just looks like a mess. Where can I show you a chart? And actually, it's interesting. Eddie, who I think is actually in the call here, he was even asking about things like January barometers, because January barometer said big rally. Then we're going to just face plant, and then we'll probably work our way back up into the end of the year. And the big conjecture is, do we have this staring us in the face here pretty soon? So here is that year, right? So out of the gate, work our way higher, and it wasn't really much of a rally, was it? Yeah, we're coming up on the time, I understand. And thank you. And do we have this kind of correction kind of window coming in front of us, which I kind of think would make sense. So if we are, bull market or early recovery, full recovery, market top, and we're seeing money pouring into the energies and the materials, of course, this is going to incentivize the Fed to continue raising interest rates. Would it make sense, given where we are? Let's see if I can just show you a simple, maybe this isn't all polluted with write-ups. Yeah, okay, that looks good. Would it make sense? Oh no, I guess that's not good. This is the chart that I use to do all my weekly options rants. You know what the hell? Let's just go. Remove drawings. There we go. All right, got it out there. Would it make sense for the market to be coming into some sort of topping window? Right, we do things like reload zones. Yeah, look at that. Right? I mean, would it make sense that the market finds some sort of top up in this area? Makes sense to me. So, yeah, I kind of like the idea of us just sort of chopping around here over the next month or so. And then as we get ready for September, October, don't be shocked if we have to do a bunch of backfilling, and, to keep this as simple as possible for you. This is why I really like these reload zones. It's pretty simple. You just simply draw some boxes, and you say, in this area, I ought to be looking for some sort of top. So we'll paint that maybe red. And in this area, I want to be looking for some sort of bottom, actually, all the way up there, right? And I want to be thinking about buying when we get down into that area. It's pretty straightforward. Maybe Chris can even make like a nice little, I don't know. Can we do like a 30-40 second short or something for YouTube? So we are coming into red boxes. This is really just TA 101. And you can see where I'd be interested, green boxes. Same, I hate to say it's the same logic on Bitcoin. The conversations that I've been having recently, on social media and stuff like that this isn't really the best place to go and invest your life savings in Bitcoins here at 30,000 bucks. I mean, basically we're probably twice the cost of production, but at the same time too, we're not really pressing new highs. We're kind of in no man's land here. And, if I was a buying kind of guy, nothing really changes with all this. Going to draw my reload zones, and you can see where I can actually justify investing right down there. That's the same logic as the S&P 500. And what I've suggested here, and this is probably the best sort of theme to finish this conversation on with you guys today, is if anything, what we really want to see out of Bitcoin. Number one, we're expecting that the market should bottom about 6 months or so ahead of halvening events. So we know that the halvening event is coming up here, sort of first, second quarter of 2024. So that means we should probably be looking for some sort of dip in the Bitcoin price through this window. What we would ideally like to see, which was the case back here, is that and hopefully you can see the exact same logic. There is the reload zone, right in that window. And what we would ideally like to see is that the market actually is dumping and panicking on something that has absolutely nothing to do with Bitcoin. This, of course, was all about, shouldn't we debate mortgage your future? Shut the fuck up and give them all the money they want, blah, blah, blah. Right? So, and the irony of it all is that if we get that repeat of that exact same behavior, that's music to Bitcoin's ears, because people will be panicking, and then the public will say, yeah, give the bankers all the money they want. The bankers go, we screwed them again, and all that bullshit. And another big wave of hyperinflation, which of course is going to send Bitcoin up to fund strats at $500,000 a Bitcoin, right? You know how the game works. And on that note, I'll bid you all adieu. I guess we'll see you all again tomorrow. Same bad time, same bad channel. And if you want to come and join us in the after party, we'll maybe look at individual signals and individual markets and see if there's anything that's actually worth buying here today. All right, everybody, have yourselves a great day. PMA for the win. All the best, and bye for now.